Okay, for this video I wanted to go over a simple example of Form W-4 for the 2022 tax year. So the Form W-4 is updated every tax year. This is the recent version, 2022, that was released about a week ago. And so as an employee, you're required to provide an updated W-4 every year to your employer. And obviously, if you start a new job during the tax year, you have to sign one of these and provide them to your new employer as well. So the Form W-4, high level, what it's doing is your employer uses this information to calculate how much federal withholding tax they need to take out of your paychecks every period. Now the form can be very simple or can be more complicated. So a simple example would just be a taxpayer with one job, no kids, no other income, no nothing. They just have that one job, so they fill at the top here, they skip all the way to the bottom, they sign step 5, they turn it in, they're done. But in our example here, what we're going to look at is with a taxpayer that has 2 jobs during the year, and they also have a child, and so they're going to be anticipating that child tax credit, and they are also having some investment income that they're considering whether they want to work it into the equation when they calculate a W-4 here. So I've got a W-4 in front of us, and the fact pattern we're going to be working with here. So the taxpayer we're going to be going through this for is John. He's a single taxpayer and he has a son. His son's, let's say, 13, so he's anticipating getting a child tax credit for his son. John has a full-time job working as an accountant and he makes $55K a year. And then John also works weekends at a call center, so this is his second job, and he anticipates he's going to earn about $8,500 a year for that second job. Now John also has a savings account where he thinks he's going to get about maybe $25 a year on that account balance. Obviously interest rates aren't great, so $25 is all there's going to be. So based on that data, how do we complete the W-4 for John for his 2 jobs and his investment income, should he opt to include it? So if we jump over to the W-4 again, let's just work through the separate sections and I'll kind of highlight each one. So the top here, step 1, pretty straightforward, right? Name of the taxpayer, address, social security number. Part 1C here, where it asks for filing status, you should answer this based on your anticipated filing status at the end of the year. Okay, so what do I mean by that? Well, let's say you're a single taxpayer at the start of the year, but you're engaged to be married. You're going to get married in July 2022. And so at the end of the year, you're going to be married and you and your spouse want to file a joint return. If that's the case, then you can indicate married filing jointly here because that's what your filing status will be at the end of the year. And then the flip side is true, right? If you're married right now and you're going to be divorced before the end of the year, then you'll be a single taxpayer at the end of the year. So perhaps you want to check single. So yeah, it just depends on what your filing status is going to be at the end of the year. So use your, your best estimate. Now, this part here, very clear, right? Complete steps 2 through 4 only if they apply to you. Otherwise, just skip to step 5. So if you don't have 2 jobs, if you don't have any dependents, if you don't have other income or deductions, then you can skip all this and just go to step 5, sign it, date it, turn it in your employer, right? You're done. But again, in our example here, we've got a little more complicated of a fact pattern. So we start with step 2, multiple jobs. What they're asking here is when they say do one of the following, you should only estimate the extra withholding using one of these procedures. So what we're going to be doing is using item B, use the multiple jobs worksheet on page 3, and then enter the result in step 4. So if we scroll down to the multiple jobs worksheet, page 3, here we go, step 2B, multiple jobs. Line item 1 here, 2 jobs, right, that's us. If you have 2 jobs, and find the amount from the appropriate table on 4. Use the higher paying job row and the lower paying job column, and then add the value at the intersection. Okay, so what does that mean? Well, if we go down to the worksheet, right, we have married filing joint up here, and then we have single filers down here. That's where we are. John is a single taxpayer. What they're asking here is on the left-hand side, find the range for your highest paying salary. Right, so if we scroll down here, John's at $55K at his accounting job, so he falls within this bucket. And then scroll across to that second job, the low-paying job, and then enter that amount. So we have John's 55K here. He scrolls across. He finds 1870, right, because his second job caps out at 8,500. So the intersection here is $1,870. Okay, so once we have that 1870 amount, then we scroll up here and we place the 1870 on line 1, right? So line 1, $1,870. Step 2, 3 jobs, doesn't apply to us because we just have the 2, so we can skip that. And then in line item 3, they want us to enter the number of pay periods for the highest paying job, okay? So in John's example, his 55K a year job at the accounting firm, they get bi-weekly paychecks, so he gets paid every 2 weeks. So the number of pay periods is going to be 26. So on line 4, you simply take the amount on line 1, 1,870, divided by 26, and we've got $72. Now, if it's not exact, that's fine. You're allowed to round. In this case, it was like 71.9, something to that effect. So we can put 72. That's okay. So now that we have the multiple jobs worksheet completed, we take that $72 amount, scroll up to step 4 here, and we enter the amount of extra withholding is $72 for each pay period, right? So that's where we report the $72 amount. Now, if we look at step 3 as well, right? So step 3, total income will be 200K or less, then compute the child tax credit. So that's what they're asking here is, if you make too much money, then the child tax credit is phased out almost completely, so you don't qualify. So in this case, what they're asking here is make sure you're within the income limitations. If so, tell us the amount of child tax credit that you might be eligible for. So the number of qualifying children, we're going to have 1, so we multiply 1 by 2,000, we've got $2,000. And then in step 4, if we go back to lines A and B, just talk about these a bit. So if you have income that you want tax withheld upon, you can have your employer effectively do it on your behalf, right? Because they will increase the amount of withholding from your own paycheck. So you recall in the example, John had $25 of investment income, okay? So if he looks at the W-4 and says other income, if you want tax withheld, this may include interest, dividends, and retirement income. He could enter 25 here, right? He could enter 25 here, but he doesn't have to, right? It's only if you want to have that income included in the calculation for other tax withheld. Okay, so in John's case, it's $25, who cares? So he's going to leave this blank. You are absolutely allowed to leave this blank. It's only in cases where you might want extra withholding out of your own paycheck to cover that additional tax liability that you're going to anticipate you owe, that you might want to put that information down there. And the same goes with the deductions here. In John's case, he's going to take the standard deduction, so he's going to leave this blank as well. If you are going to itemize the deductions, then go ahead and complete the worksheet down here on page 3 for the deductions worksheet. Right, so you're allowed to factor in itemized deductions. And the reason why that's relevant is because if you have more itemized deductions that exceed the standard, then it's going to lower your tax liability or your lower taxable income at the end of the year. And so that should be factored into your withholding amount. Now, so what does the employer use all this information for? Well, the best way to look at it is a payroll withholding worksheet. So most payroll systems are obviously all automated now, so all of this happens behind the scenes, but this is effectively what the employer is using your information to calculate the amount of withholding coming out of your paycheck. So this is an example of what a worksheet might look like. They're asking for total taxable wages for the payroll period, the number of payroll periods, right? And then they're asking here, has the employee submitted a W-4? If so, enter the amounts, right? So step 4A, we just looked at that, right? Step 4A was the other income. If we have other interest income or dividends that we wanted to report, we can include that here on the worksheet in 4A. Step 4B was the other deductions, right? So if we have itemized deductions, that amount would factor in here. And then there's also fields for dependent child tax credits, extra withholding amounts. So the Form W-4, the fields are relevant in that they will get pushed into a system that looks similar to this, that will pop out what the amount of federal withholding tax is on your biweekly or weekly or monthly paychecks, whatever it might be. So this is, and again, this is all happening behind the scenes. You're not going to see any of this Your HR person isn't even going to either. I mean, they're going to just take your W-4 information, they're going to key it into the system, and it's going to pop out whatever the relevant withholding amount is. So W-4, again, just to kind of close it all out here, it is important to complete this as accurately as possible, right? Because you don't want any more or less withholding coming out than you should have. But for most taxpayers, again, it's pretty straightforward. A lot of times you're not even completing steps 2 through 4. But if you find yourself in a position where you have a child that's going to be dependent, or you do have multiple jobs, or you have a lot of itemized deductions, let's say you have a lot of charitable deductions, or you have very high mortgage interest and property taxes, you might want to complete these sections here in step 4 to try to either lower or increase your withholding amount depending on whatever your tax profile looks like. Okay, so that covers it. I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again soon. Thank you.